Ladies and gentlemen, boys and girls, finally, we finally got a break from the carnage. Finally, we start to see a correction from 120s towards 107. This might be a much needed break. What this is gonna do is that it is going to lower energy prices. But before we move forward, let me disclaim myself a little bit first, alright? A little bit of disclaimers. At this point of time, I'm speaking to a lot of you. I cannot possibly know your financial situations. This is by no means any advice. Please do not take me seriously. Look at me as a entertainer. So there may be some hope in the market. At this point of time, the oil prices are falling. Russia is in the brink of default. Fear has already crept into the consumers enough for them to shop less. This demand destruction actually worked really well. Okay, it works okay. People are suffering, but they didn't die. So long they don't die, it's fine. Okay, so this actually brings supply back into balance with demand, which is very important to have stable prices. This is the main mandate for the Federal Reserve. Everybody remember that. This actually happened, okay? Jerome Powell actually went to the Senate meeting and then he kena crucify over there. He kena crucify because everybody don't understand his job. Everybody looked at his job like the one switch that flicks, everything changed. But the thing is, his job is very mechanical, okay? Remember, the Federal Reserve's monetary policy actions are guided by their mandate to promote maximum employment and stable prices. Stable prices does not happen. Maximum employment is not sustainable. And the man is stuck in between a rock and a hard place because the only two options he gets are the risk of having a stagflation or the risk of having a recession. A recession, the market can correct itself. In a stagflationary market, this is when markets go a little bit crazy. So Jerome's choices are very simple too. Either stagflation or the demand destruction, which will lead to having higher recessionary risk. According to Jerome Powell, it has not been confirmed that a recession might be happening, and he's actually telling people that this is what's going to happen. And because of that, let's look at what happens to the supply and demand. Okay, there are three main factors that I want to update you today. Jerome Powell testifies before the banking community, which is what I was talking about earlier. The whole banking community actually reached out to him and asked him, hey, do you realize the repercussions of increasing interest rate? And he's basically saying, hey guys, I got no choice, this is my mandate. Alright, so the three main update. The next thing is the oil prices falling. When the oil prices fall, the cost of energy drops, which means the cost of goods will no longer have that kind of inflationary pressures by the cost of energy. This is amazing. And the next thing is that Russia is on the brink of a default. What Russia is going to do, whether or not they default, I think Putin hardly cares. So let's look at the graph a little bit, okay? So when Jerome Powell testifies, demands shift left. Okay, this is when the demand destruction comes in and then the price actually drops, the quantity actually drops at that point. Okay, so the oil prices fall. This actually brings back the quantity to the right. This actually moves supply to the right. This actually helps the supply chain. And because of that, what happens, right, is that you will realize that this is an economy where we finally have lower prices. That said, definitely when you look at the S&P 500, this has been pushed into the rally. Everybody is excited about this. Everybody's happy. So the bonus content is when we look at the SPX chart. We actually draw a Fibonacci retracement from the top all the way to bottom, and we can actually see that the retracement has actually happened. The retracement went up all the way to the 0.236 levels, which is 23.6%. What led us here was a very strong and bullish candle. This is a Mario Buzu, which is the angry Japanese man. This angry Japanese man wants the market to go up. Let's see what the market does at the end of the week. I'm excited to see. This is gonna be a very interesting week, guys. That was fun. That was a little bit speculative, but let's go back to our macroeconomics numbers. Remember, always lead with macros. Okay, all of that is just to confirm what you want to do before you do it. Okay, so let's go into the more important numbers right now. I want to talk about the US consumer sentiment. At this point in time, is the lowest it has been. I have actually made a video to warn about that. I'm gonna link it over there. Alright, this is because of consumer spending increasing, but the consumers don't really have a choice because inflation is there. And because of inflation, this is actually going to eat into the consumer's paycheck. What happens is right now their personal savings rate has dropped to 4.4%, and this is a scarily low number because unemployment is around the corner, alright? Unemployment always happens whenever recessions hit. I think we can agree that the risk of a recession is not zero. So moving on, let's look into the supply numbers. So this is the United States Manufacturing Price Managers Index. This is made out of a lot of complicated new stuff that actually gives a more forward guidance kind of situation. Tells you like, hey, how's the market gonna be doing? Anything above 50 is good, anything at 50 is stay, anything below 50 means that it is going down. At this point of time, it has went down, but then it is still above 50. So at this point of time, it is still expanding. Let's look at the manufacturing production. The actual production is pretty flat. Flat is boring. Boring is good. Okay, next. Bankruptcy. Bankruptcy is low. No bankruptcy, good also. Okay, the next thing is the corporate profits. Okay, this one we need to talk a little bit more. Okay. Corporate profits in the US fell 4.3% to 2.42 trillion. How this is important is because this actually affects unemployment quite a bit. If the profits are not that high, companies are looking to hire less or to cut costs, and because of that, unemployment season might be around the corner. And also the next thing we want to talk about is the price of crude oil. If the price of crude oil drops, so does the cost of energy. And at this point of time, there are people who are doing things about it. First things first, we've got US and Iran talking about the 2015 nuclear deal. And the next thing is we have the group of 7 discussing a price cap mechanism on Russian oil. This is really, really cool. Another thing I want to bring into our attention is the fertilizer shortage. This is worsened by war in Ukraine, and this is driving up global food prices. This is also talked about by Reuters and National Geographic. And to make things even worse, there is a drought coming to US. So the food crisis is going to be something that's pretty proper. Remember, we need to look at the FOMC meeting. This is going to happen in July 26, 27. 27, the minutes will come out. This is exceptionally exciting because this is also within earnings season. This is gonna be a very, very volatile month. Alright, finally we come to the end of the video. Let me conclude. If I were you, I would consider deleveraging if you are in a leveraged position. This is because we do not know how long this is going to play out. We are not out of the woods yet, and very unlikely this is the bottom because we have a lot of other problems. At this point in time, my predictions for FOMC will be 0.5 and then followed by 0.25 rather than what they actually say, which is 0.5 to 0.75. This is because when I look at the consumer numbers, I know that the consumers cannot take much more increases. Okay, so there will definitely be more pain to come. I want you guys to brace for it to be able to tahan this period. Okay, and the next thing is you do not need an economist as a mortgage strategist, but it helps, yeah. That's it. That is all my time. Thank you guys so much. I hope to see you guys again soon. You are a remarkable person. Remember to like, share, subscribe. You are incredible. You are amazing. I'll catch you in the next one.